Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, we're there. We're in June, first week of June, Curtis. And, the sun has kind of been trying to come out and give us a little bit of that spring, summer joyfulness. But it does very quickly get followed up by a few black clouds and rain, doesn't it?
It does indeed, yeah. So fingers crossed that the weather remains good over the weekend whilst you're listening to the podcast.
But next week you won't be bothered, will you? I don't think.
Well,
you will be actually.
Yeah. No, I'll be listening to the podcast from afar. Yeah. I'm holidaying in the UK, so yes. I've definitely got my fingers crossed for decent weather.
Yeah, you are keeping an eye on the UK forecast for next week for sure. So we've got a few shout outs, and the first one we've got you've got the full interview that was shared during the week with Robert Forrester. There is a little bit, you have to listen to the full interview. There's a little bit of a story behind this podcast, but hopefully you enjoyed the version that I did manage to get published with that chat with Robert. But obviously, talking about his full year financials, but more importantly, sharing a little bit sort of his view on the new and used car market. And as you expect with Robert, talk a little bit about politics, don't we? As always.
Yeah, just a little. Yeah, it was a fascinating chat. Robert was incredibly relaxed and forthcoming as ever, and we did touch upon a wide range of subjects, didn't we?
Yes, yeah, we kind of went into it because it has been a while since he did announce his full year financials, but we wanted to chat to him about a few other things happening in the market. But we have got a snippet of that interview on this morning's podcast. But as always, have a listen to the full interview on your podcast feed from earlier this week.
And you'll be joined by friend of the pod, Carl Davis, founder of Coachworks, industry coach and consultant. And Carl is our sort of regular substitute, isn't he? Because he stood in for you last summer.
Yeah, I've not had the pleasure. I've not had the pleasure of doing a podcast with Carl. So I am really looking forward to it. I know you did the last one when I was on holiday, but I am really looking forward to it actually, because I know that it was a fascinating and great chat with Carl last time.
Yeah, and Carl will be familiar name to many listeners, really from his work with Coachworks, which goes back, it's probably 20 plus years now. And Carl's always got some interesting views on what's going on in the industry, best practices. So I'll look forward to tuning into that one, Phil.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Motor Trader, Car Dealer, Motor Finance and Fleet News, starting with the SMMT's new car registration figures are in. So we'll take a look at how the May market performed. And it's good news. It was up for the 22nd month in a row. Meanwhile, Motors has also released its market view analysis of used car trends also for May, as EVs stocked by dealers hits a new high. We've got the latest Motor Trader Top 200, which reveals a dealer group sector in a state of flux. JudgeService reveals the top OEM brands for customer loyalty. The Vehicle Remarketing Association issues a warning on oddly specced COVID cars. And finally, and I'm looking forward to this one, Phil, we can add yet another name to the growing list of car brands heading to the UK. Only this time, it's an old name that fancies another chance.
And it's not from China.
It's not.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
So before we look at this week's headlines in depth, here's an extract from our conversation earlier in the week with Robert Forrester.
Electric vehicle zero emission mandate is going to be exceedingly problematic for the industry, particularly the manufacturers. But there'll be a knock-on impact clearly on retailing. It doesn't make any sense. It is broadly unachievable. Well, it is completely unachievable over the next few years, and it will have severe consequences when reality hits what is a delusional policy. And I think we're starting to see that in terms of curtailment of volumes, cutting back on petrol and diesel supply. There has to be, I haven't fully read the SMMT announcement yesterday, but I quickly glanced at it, and I think it should start to refer to, manufacturers can't keep discounting electric vehicles at the rate they're discounting. I mean, they've invested billions in the factories, billions in the technology, and the British government seems to want them to sell them at a loss, which is really not cricket, is it? So I think we're going to see quite a change in the new car market of potentially a continued reduction in retail, and probably the fleet market will turn as well. And there'll be plenty of demand, but I think supply will be constrained because people are trying to balance this mix of BEV and non-BEV and trying to avoid £15,000 per car fines. I mean, it is a mystifying policy, really. And I suspect, well, I don't know, you could argue why are they doing it. I think it will certainly reduce the number of new cars on the road. I think that's a certain fact. That's what it'll do. And the upshot of that is we'll be in quite interesting trading conditions whereby new car volumes will be low, fleet volumes will be lower, and probably used car values will be very strong in ICE.
And Robert, staying with the ZEV mandate, because as you say, we are seeing some interesting trends that maybe we haven't seen before. And, fleets taking a 60% market share in the year to date. How much of this do you think is actually being driven by the legislation, by the ZEV mandate? Is that starting to really impact?
Everything can be explained by the ZEV mandate. If you don't understand the ZEV mandate, you don't understand the UK car market. Everything starts and finishes with it. It is forcing the manufacturers to push battery electric vehicles, which on average have a much higher price than the similar ICE product, in a period of real wage, we're now into real wage growth, but real wage decline and a quote cost of living crisis, with a high interest rate on a high car value, which means the monthly payment's gone up. And then just to add insult to injury, battery electric vehicle prices, I think actually on last week's show, if I remember rightly, you said that battery electric vehicle prices have come down every month in the last 21. And it was something like 57% reduction or something, if I remember right.
Yeah, cumulative 57%.
Yeah. So let's go and try and change an electric vehicle customer who bought 3 years ago. I mean, what's their part exchange worth?
Yeah.
I mean, you're into big cost of change problems there. They're probably not changeable. So the actual natural demand for retail battery electric vehicles, the inability to change those that have already bought them, not that there were that many 3 years ago, but still it was a start, means that the retail market, the battery electric vehicle market share is less than 10% currently, retail. Yeah. It will not remain less than 10%. And all the EV champions, of which I have much fun watching on Twitter, will argue this is the sea change, consumers are coming onto the fold of electric vehicles. No, actually what's going to happen is that they're not going to be able to buy a petrol and diesel car. So looking at percentages will be absolutely fascinating, because I think we'll have a load of different things happening. In the fleet market, which clearly due to the taxation of company cars, the rise of salary sacrifice schemes, demand for battery electric vehicles and at a significant discount to list is very, very strong. And it will remain so, albeit you would anticipate that the manufacturers would seek to try and get some profitability into the job by trying to get some price rises in so they don't make losses. But that will clearly have an impact then on demand. But the fleet companies are going to have to get cars from somewhere. And I think we might get back to that post-COVID situation where manufacturers look globally and go, where are we going to send the cars? Well, we're not making any money in the UK on electric vehicles, so why do we want to send a lot there? And if we don't sell electric vehicles, we can't really sell ICE. So we could end up with quite a constrained market. And that will then lead to a shortage of cars, shortage of part exchanges coming back, and used car prices go through the roof.
Well, that's just a teaser, Phil. I mean, it's as we said at the top of the show, it was a great conversation we had with Robert, and it did cover a lot of ground. He had a lot to say about the new and used market, the ZEV mandate. So, I do urge you to listen to the full interview, which is available on your podcast feed.
Yeah, definitely. I mean, Robert is always relaxed, isn't he, when it comes to talking about the market. He's a seasoned professional, and we could spend hours talking to him on these kind of topics, but obviously we couldn't do. So, as I say, have a listen to the full interview on your podcast feed. You won't be disappointed. Is usually one of the highest listening podcasts when we get Robert onto the show. So do listen to that when you get a spare minute if you haven't done already.
So first headline this week comes from Car Dealer, and the headline is Fleets Drive Growth as New Car Market Enjoys Best May since 2021. So this is the new car regs. They came out at midway through the week, and it saw the 22nd month of growth in a row. So rising by 1.7% to reach 147,678 units to be precise. So it's the best May since 2021 when sales hit 156,000, although the SMMT did say it was nearly a fifth down, so around 19.6% on 2019's figure of 183,000. So obviously that pre-COVID figure that we do track against.
Yeah, as you say there, if you do look at that sort of pre-COVID year 2000 to 2019, the average for the month of May is normally around the 176, just over 1,000 vehicles, and so that would equate to a 16.3% drop compared to pre-pandemic averages. But again, as you say there, Curtis, a growth of 1.7% year on year, and does continue that sort of marginal growth, because last month we had a 1% year on year growth, didn't we, for the month of April. So, we're starting to see marginal growth, but again, with this, it's always at the minute sort of focused on the fuel type performance and what's happening in that private and fleet sector, particularly around fleet and let's say fleet and the EV sector being driven by fleet registrations.
Yeah, definitely. And Car Dealer have done a good job actually just digging into the data, because I'm not sure that this part of the data was generally released, widely released. So they identify that the fleet sector drove battery electric vehicle uptake, though at 10.7% volume increase, with private uptake dropping by 2%, which the SMMT said was still below the ZEV mandate trajectory, which, as we know, is set at 22% of new vehicles. Yeah, so looking at the stats overall, fleets and companies continue to drive growth, up 14% and 9.5% respectively, which just narrowly offset a 12.9% fall in private retail sales, which for the month totaled 57,453.
Yeah, and I think this is again, this is given the opportunity for Mike at the my cause at the SMMT to again make a point of the body who are trying to call for halving VAT on new battery electric vehicle purchases, as well as cutting VAT levies on public charging from 20% to 5% to put it in line with domestic charging, because you do speak to a lot of people who have EVs, and one of the issues is when it's okay when you've got your home charger, but actually the minute you start to go onto the public charging network, that significantly changes that cost of charging your electric vehicle. And as we know, not everybody has got home chargers available, and they do have to rely on public charging. So again, Mike is trying to call out in this month's results that there is still a lot of work to do, and it's demonstrated by that 2% drop that you mentioned in terms of private adoption of EVs, that there's still a challenge there in there. And the question with all of this is, how long can the fleet sector sustain this battery electric growth of the sector? We know that fleet operators are severely underpinning this growth of battery electric vehicles, and a lot of it is being driven by ESG strategies. It's not necessarily the financial benefit; it is being driven by their ESG.
Yes.
So that's some of the risks with some of this.
Yeah, definitely. And you've actually got some European figures, haven't you, just in?
Yes. So there's been quite a bit happening across Europe. So to give the UK context of that 1.7% year-on-year growth, Spain marginally up to just over 95,000 at 3.4% year-on-year growth. You've got Italy, who are down 6.6%, down to 139,600. France, similar to ourselves, actually, they were down 2.9%, but with a volume of 141,300. Germany isn't quite out yet. Germany tends to be a little bit later than others at releasing their numbers. The US was up 5.1% to 1.4 million vehicles.
So moving on to car dealer, and the headline there is used car dealers stocked record levels of electric vehicles in May. So this is the monthly analysis from Motors, the market view analysis, which found that in the month, dealers stocked their highest ever proportion of used EVs. And indeed, alternative EVs were at their highest level, amounting to 12.8% of stock that was actually held by dealers over the course of the month. But within that, 5% was used EVs, and that's up from 3.5% in May 2023. So that actually represents the biggest share of used EVs amongst dealers.
Yeah, no, and it kind of reflects what's happening in the market, doesn't it? Generally, I mean, we know there is more EVs entering the sector, and again, we touched with Robert about the EV market and their view and transition to an electrified marketplace. But again, similar to what seems to be muted from a lot of the OEMs now, not just in the UK, but across Europe and across the international market, that hybrid is having a bit of a comeback, isn't it? Because as you highlighted there, that the hybrids have grown from 7% to 10% in that same period as we've seen the growth of EVs. So there is this move now, and you just assume that you think, well, is this where people do actually want an EV, but they're not quite there yet to make that move, and they're quite happy that hybrid is their stepping stone to an EV. But as always, there's plenty of detail in this report, because it highlights that they talked about May has also marked a drop in the average advertised prices of used battery electric vehicles to a new low of 27,241, and that's a 3% month-on-month drop, but down 10% year-on-year. So that kind of again reflects where we've got this older cohort of vehicles, and we had that interview, didn't we, Curtis, with Chris Plum from CAP HPI, who were talking about that EV market, but more importantly, that price point within that EV marketplace.
Yeah, definitely. And prices for used EVs have now been falling for 8 consecutive months. So that really does tie in with those monthly conversations that we have with CAP HPI, where they're obviously talking about the wholesale values. So that is filtering it, and it is being tracked by the retail sector. And within the story, Lucy Tugby, Marketing Director of Motors, says, we are starting to see some evolving trends in the used EV sector as a result of greater numbers becoming available and falling wholesale values driving down retail prices.
But as always, do head over to the Motors website, because there's lots of detail behind these reports that Motors produce monthly. So very much digging deep into the data of activity within the sector.
And next headline is from Motor Trader, and it is Motor Trader top 200 dealer groups reveal a sector in flux. So this is the Motor Trader top 200, which I certainly remember from my days at Motor Trader. Yeah, and major piece of research. It's actually done by Chris Oakham, and Chris has been putting together the top 200 for quite a few years now. It's probably about 10 years. And it's a great snapshot and analysis of the sector, how it's performing, because what Chris does is he looks at the sector as a whole and compares turnover figures year on year from individual groups as well as collectively for the top 200. And the sector in flux that's alluded to within the headline is very much Chris's comment on how the acquisitions have panned out over the course of the last 12 months. So we've seen smaller, medium, and indeed large groups disappearing as they've been acquired, and the size of the franchise dealer sector is contracting as a result of that, and that's very much reflected in this year's top 200.
Yeah, and as always, there is a top 10. Which has remained fairly static, albeit a few little moves within that top 10. In particular, obviously, with Lithia taking ownership of Pendragon there, but primarily Sytner Group stays top in number one position there, with the highest, followed by Arnold Clark's, don't they?
Yeah, so the top 10 entry for the top 10 is based on turnover now of over 1.4 billion, because the number 10 position, Inchcape Retail, their turnover 1.4 billion. Number 9, Jardine Motors, which obviously now Lithia. Number 8, Truss Ford. Number 7, Group 1. Number 6, Pendragon / Lithia. Number 5, Marshalls. Number 4, Vertu Motors. Number 3, Lookers. Number 2, Arnold Clark. And as you said, number 1, Sytner Group. And Sytner Group's turnover is £6.8 billion.
It's a big number.
6.8 billion. That's massive.
Yeah, exactly. So some great performance there. But as you said right at the outset there, that shows that flux and how that market is changing. As you said there in the top 10, you've got Lithia, who sits behind both the Jardines, who are in 9th position, and there with Pendragon a bit further up that top 10. But clearly showing how that dealer market is starting to shift.
Yeah, definitely. Now, after the break, we're joined by Stephen Whitton.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men Able moment looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whitton.
Yeah, hi everyone, it's Men-Able Moments time again. I hope you're well and hope everything's going great in your world. We're in a new month already, nearly halfway through the year. How the hell has that happened? Time is whizzing past. I know we keep saying that, but it absolutely is. And it's June. And June means just one thing. In the calendar of all the things that we have going on throughout the year, where we now have a day, a week or a month celebrating something or other, or commemorating something, June is Pride Month. And we can't let a Men-Able Moments go without mentioning Pride. So I'm delighted to see so many businesses embracing that, because Pride really is about a protest. Originally, that's where it started, and that protest was about ensuring visibility and acceptance and awareness. And I like to think we've come a fair way on that, actually, because Pride has now in a lot of cases become not so much about a protest, although that still is the core of what it's about, but actually a celebration. And it's a celebration of diversity and inclusion and love and acceptance. And as I look round, I see lots of LinkedIn posts, lots of comments, lots of businesses embracing it. Even my local Morrison's has got Pride flags everywhere. And last week, many of you will have seen that I put a post on about my hometown, Leighton Buzzard in Bedfordshire, had its very first Pride event. And it was awesome. It was absolutely amazing. It was really good. It almost felt like the entire town came out and came together, not as in come out, they didn't all come out, that would have been something to report, wouldn't it? But anyway, they all went out to enjoy the evening in Pride, or at Pride, and it was fabulous. The event was great, it was well organised, lots of good entertainment, and the atmosphere was amazing. And what was so good to see was the amount of families there with children and young people that were just there being encouraged to accept and love and understand and just include everyone. And I did also report in that post, though, that there was a little comment that was made to me, because many of you know that I occupy my own place on that Pride rainbow, and I'm not going to tell you where it is for two reasons. One, because it doesn't define me, it's not about who I am, and two, it's no one's business really, so it's well documented, and if you know, you know. But at the end of the day, that's the point, that it doesn't really matter. And for many years I'd kept all of that to myself, and I was fearful that the industry I worked in was not going to be accepting, and actually I've found the opposite. So for Pride Month, I wanted to give you all a little bit of a pat on the back and just say, I love you, and you're wonderful, and what an amazing industry we are, that we can be so diverse and accepting. And I do think we have some work to do. But anyway, this comment that was made, I walked into the pub in town, one of the pubs in town, after the Pride event, and I was wearing my rather flamboyant jacket and a few rainbow things sort of hanging off my belt and stuff like that. And some young person made a comment, not sure what it was, didn't quite hear it, but it was clearly derogatory, and it was also followed by sort of grabbing at the scarf that I was sort of had tied around my belt. And I just thought, how childish. What an opportunity for this young man to grow up. And then I thought, no, actually, that's an insult to call it childish, because those children that were at Pride didn't behave like that. But also it made me think, what is he trying to cover up? And the link to mental health in all of this is that the whole process of coming out and, being on the Pride rainbow does not in itself represent a mental health issue, but the issue around being yourself, being authentic, being who you really are, does. And what we need is for our industry to just make it absolutely clear to everyone around us that that's what we're about. We're about love and acceptance and understanding. So whatever you're doing in Pride this month, go forth and include. I'm not sure where that came from, but I like the sound of that phrase. And let's continue the love and acceptance that our industry just does so very, very well. Culturally, we probably do need to do a little bit more work, and if you want some help with that, give me a call. You know how to get hold of me, stephen.whitton@menable.org, or on LinkedIn, or on the website, menable.org.
Well, Phil, that was our very own Rainbow Warrior parked up by the side of the road.
Listening to the traffic go by.
Listening to the traffic, yeah, and making the most of his downtime. So, many thanks for that, Steve. Great Menable moment and thought-provoking as ever.
Yeah, and as as always, if you want to get hold of Stephen for anything, then menable.org is the website, or you can email him at Stephen, that's with a PH, .Whitton, that's WHITTON @menable.org, or find him on social channels in primarily LinkedIn. So back to the headlines now, and heading over to AM Online. And you'll know a little bit about this. And this is a new report coming out from JudgeService. And the headline is that Volvo tops JudgeService brand loyalty rankings. So, as I said there, this is a new report that the Car Brand Tracker, which is polling the views of over 1,200 owners, to measure their perceptions and awareness of all car manufacturers active in the UK.
Yeah, and I worked with the JudgeService guys on this. As you say, it's their brand new Car Brand Tracker, and what they're doing is they're looking at the OEMs and just trying to measure the levels of brand loyalty. So the top 10 for brand loyalty is based on responses to owners being asked how likely they are to purchase the same make again. And it is quite revealing, because the 10 highest rated OEMs really do feature quite an eclectic mix of premium, mainstream and budget brands. So as you mentioned, Volvo took the top spot, and they were followed by Land Rover, Dacia, Suzuki, Mini, Nissan, Toyota, Volkswagen, Skoda, and Mazda. So that really is quite a mix, isn't it, of those premium, budget and mainstream brands. And the degree of satisfaction among owners was also measured by their likelihood to recommend their chosen brand to family and friends. So this is very much the sort of anecdotal conversation around the table or in the pub. And as a result of this, Suzuki, a perennial award winner for customer satisfaction in its own right, was ranked the highest of the 10 top brands for recommendations. And that was followed by Volvo, who actually took second place for this. Dacia, Nissan, Seat, VW, Mini, Toyota, Skoda and Mazda. So pretty much the same brands in both top 10s there for brand loyalty and recommendations.
Yeah, and there is some comments here from Neil Adley, and it's quite interesting, because this does come at a time, as we know, with all the new entrants coming to the UK, and we'll talk about the return of an entrant, new entrant, return off at the end, but we'll come to that one. But it is real that there is context to this in terms of what's happening, particularly in the UK marketplace. But Neil does comment that from the results from the poll validate Volvo and Suzuki are formidable brands in the UK who punch above their weight when it comes to delighting their customers. He said that with the arrival of new entrant brands into the UK market, it will be fascinating to see how the landscape changes. And if a brand is not doing well in terms of that awareness, loyalty and or recommendation, it needs to decide where it is set in the battleground. If it comes down to the battle on price, it is likely the new entrants will win. So this is about the service versus price in that brand landscape. So it's going to be fascinating as this sort of report continues, what we start to see change when we start to see a lot of these new entrants in the sector.
Yeah, and there is more research to come out of this car brand tracker over the coming weeks. So I'm sure we'll report on that as and when. So moving on, the next headline is from Fleet News, and it is valuation issues for COVID cars impacted by supply chain disruption. So this is an interesting one, isn't it? Because cars made during the pandemic, as we reported on at the time, often had unusual specification due to the supply chain disruptions. And this has actually been picked up by the Vehicle Remarketing Association. So Marcus Blake, chair of the trade body's Industry Trends Committee, said that dealers and traders were buying cars expecting them to meet certain equipment and spec levels, then finding key items are missing. And you've actually got a bit more detail on this, haven't you, Phil?
Yeah, because well, as you say, we've talked about this, didn't we, throughout the pandemic, where there were vehicles entering the sector that through the the highly publicised semiconductor shortages, but that led into other things, didn't it, within the sector, as we well know. But there was vehicles that were landing in the marketplace where certain items weren't fitted, or they were going to be fitted afterwards as a follow-up, as a recall, or you just weren't going to be on that vehicle. And this is the thing now that is very difficult, and Marcus was discussing this with the subcommittee of the association around, is this an issue? Is it something that the sector should be aware of? Because we are a few years on now, with these vehicles are coming back into the used vehicle sector through the remarketing sector. And there'll be things missing where you'll have head-up displays on certain packs that won't be on it. There'll be seats that might be meant to be a 10-way seat and it's an 8-way seat, or there'll be touch screens that don't actually do anything if you touch them. So that these are things that the nuances that will be appearing in the sector that you might do your spec check and assume it's an item that was an option, or it's part of the standard specification. Now, some of this was corrected by some of the OEMs because they could correct it at the MIVRIS code level, at the highest level, where these were then adjusted. So when you do search that vehicle on a system, it is highlighted. It's aware that spec is not on it, but not everything was done that way. So it is a difficult one, and this is what Marcus was trying to highlight, that how do you operate this? How is it that it's just a used car and it's got what it's got? That's it. How do you value these vehicles? And what is the impact of how many of these vehicles are operating within the used vehicle park that are already coming through the remarketing sector, or still yet to come through the remarketing sector?
Yeah, and within the story, Dylan Setterfield from CAP HPI, he does comment on this, because it's obviously something that CAP HPI track closely. And he says that in some cases, items were changed on older, smaller, less premium versions of the existing equipment. And in other cases, specification items were removed altogether, which is what you were saying. And he goes on to say that on each occasion, a decision was made as to whether the requested change would be likely to have an impact on the valuation of the vehicle, either positive or negative. And in these cases, new CAP IDs were actually created. So in terms of these vehicles, when they do make it onto dealer forecourts, do you think dealers will be in the loop and they'll be able to identify what's missing without actually going through all the spec themselves?
I'd like to say yes, but some will and some won't. I think if you've got a VW going into a VW franchise, they'll know what a vehicle spec should be on that vehicle. If you've got a VW going into another franchise or even a supermarket, you may not have that knowledge and expertise, that you'll just take it that it's a standard vehicle and therefore it should have that spec on it. And that's the thing that is the question of it. Is it just the fact that, if you are buying a used car and you're buying what it is because it is unique in its own right, isn't it, as a used car, and it has got the spec, the mileage, age, condition as a used car, and it's priced according to all of that. Should it make a difference whether it's showing a 10-way, 8-way seat, or whether that's, touch screen's slightly different, isn't it? I think you'd expect, if you've got a 8-inch display with buttons on it, you expect something to happen when you press them, I suspect.
Yeah, exactly. And this, I suspect, is where dealers are going to start to get a lot of flack when those cars are bought and the new owners start playing with, as you say, the touchscreen display, and it doesn't work. It doesn't respond to touch. So, yeah, it's certainly one to watch out for, isn't it?
Yeah, and it's very difficult to monitor. It's very difficult to identify them. I mean, like you say there, Dylan does highlight that on some occasions, because they were permanent from the OEM, that adjustment had been made, then the new IDs were created, and therefore that cap ID leads back to the MIVRIS code, and the spec is according to that MIVRIS code that was adjusted. But again, you may think that, that used BMW with that pack on it, wise, you'd expect that vehicle to have it without checking the spec on it. But again, it's highlighting, and probably one that is just sort of indicated for the most, the remarketing and the dealer sector, just to keep an eye on it. Watch out for, don't assume that the vehicle's got the spec that you think it should have if it was registered throughout that pandemic period when we had the semiconductor and the supply shortages.
So, final story this week is from AM Online, and we're going back to that little tease at the beginning about this brand. Yeah, we do talk about all these new brands heading for the UK, but in this particular story, it's an old familiar brand who's coming back, and it's Cadillac. So the headline is Cadillac to start UK new car sales again. So this is, the US premium brand Cadillac is planning to launch 2 electric cars in the UK before the end of this year. So this is pretty imminent. And this will actually be 20 years since Cadillac last entered the UK, which was pretty much an ill-fated attempt to gain a foothold in the UK premium market with those big V6 engines American cars. It didn't end well. Well, it didn't start or end well. I mean, I do recall this because at the time I was at Motor Trader, we were invited to the launch of Cadillac in the UK, and back then it was distributed by Kroimans, and Pendragon was the designated retailer for the UK, and it's moved to set up a network of 12 dealerships. I don't know if it ever reached 12, but the cars never gained any interest within the UK. They were American designed, very much for American roads. And the last throw of the dice was GM taking the decision to start restyling and pretty much rebadging some Saab 9.3s as the Cadillac BLS, which I don't know if you recall that car, Phil,
yes,
but that was not warmly received, and the plug was pulled shortly afterwards.
No, and it is going to be interesting because they are entering a pivotal time, I suppose, in terms of what's happening purely in the UK and Europe, as we've talked about many times on the podcast now, with particularly the Chinese new entrants as being the most dominant one in the EV space. And you have got those legacy brands, be it Audi, Polestar, Tesla, that are trying to, defend against those new entrants in the marketplace. But again, this comes with a really fairly, I think there's a couple of lineups of models planned for the marketplace. And is it Optic Optic, I think, is the mid-size crossover that the hope will be a competitor to the Q4, Audi Q4 e-tron, the Polestar 2, and the Tesla Model Y. It's saying that vehicle has a powertrain that develops 300 horsepower on an 85 kilowatt per hour battery, and gives you a potential estimated range of up to 300 miles. Now, obviously, the question we're going to be is, one, where will that brand sit in the marketplace? Back to the JudgeService and brand loyalty, because some of the market will remember the original Cadillac and how it did in the UK. Some won't care. But it'll be interesting to see how it does pan out against the market. And they're also bringing a second model out, which is the Lyric, if I pronounce that correctly. And that's saying that it's fitted with a 102 kilowatt per hour battery. And that's expected to give an extended range of up to 330 miles. And these vehicles have already started up in the European market, with prices starting from £70,000 sterling. So not the cheapest entry point there, considering what they're going to be up against in the market.
Yeah, exactly. And I guess what's probably most interesting about this story is that it's General Motors taking another look at Europe, because after it sold Vauxhall and Opel to Stellantis, it pulled out of Europe. So this is GM dipping its toes back into Europe. And within the story, Tim Rose actually makes the point that after limited uptake of these models in the US, the car maker sees an opportunity for growth in Europe. So not doing well in the US, introducing them into Europe. Yeah. And the added complication, which GM never got its head around last time, was right-hand drive for the UK. And it didn't work then. It remains to be seen if it works this time around. And again, it'll be interesting to see who they partner up with. If they're talking about introducing these two models before the end of the year, then they must have some partnerships or partnership plans in place.
Yeah, so we'll keep an eye on that one as it develops, and when we get people on the podcast, I'm sure we'll start to ask the question and where this the Cadillac brand starts to sit in the dealer lineup of franchises. But again, another one that's going to be very interesting to see it develop in the UK market.
That's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Do remember to check out that full interview with Robert Forrester in your podcast feed. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.